Let's shift focus to personal finance. As promised, Hemant Rustagi of Wiseinvest Advisors is with us. And Hemant, the question that we have for you, in theory a fund of funds has very obvious benefits. It takes the wisdom of several fund managers. But is that really the case in terms of actual performance? Why haven't they managed to pick up in India as a concept itself?
Well, Lata, one of the major advantages of, investing in mutual fund is that they offer a variety of funds. However, considering the fact there are hundreds of funds to choose from, it can be quite a daunting task for investors to make the right selection. So I think in that context, if we really see, fund of funds can be a pretty good option as it not only allows investors to invest in funds, investing in different asset classes, following different investment philosophies, but also they can do so by investing much lower amount than if they were to invest in these funds separately. Besides, there are funds that follow, invest in more than one asset class. They have a pre-decided asset allocation, which means that they maintain it at all times. The major advantage for investors here is that they don't have to worry about, rebalancing their asset allocation every now and then. Currently, I think there are three types of fund of fund that are available to investors in India. First, there are fund of fund that invest in the schemes of the same mutual fund. Now, in this category, there are gold saving fund that allow investors to invest in gold ETF without having to open a demat account, which are the most prominent ones. In fact, another advantage of investing in these fund of fund is that investors can invest through SIP, which they can't do in gold ETF. Second, there are fund of fund that invest in the schemes of other mutual funds. Presently, I think there are only one or two mutual funds that offer this kind of fund. Third, there are fund of fund that allow investors to invest in international funds, thereby allowing them to diversify their portfolio internationally. In this category, there are country-specific funds, there are region-specific funds, there are also thematic funds that invest in different commodities, like you have gold funds, you have natural resources fund, and also the fund that invest in emerging markets. So as we can see, there is a lot that these fund of funds can offer to the investor, but unfortunately, despite the fact that fund of funds are quite popular globally, they have failed to make an impact in India, and I think there are a few reasons for that. First, most of the funds in India, especially the domestic ones that invest in different asset classes, invest in the schemes of their own mutual fund, which means that investors have to rely on the expertise of the fund managers of the same fund house, and that restricts the options for them. Second, any investor in a fund of fund has to bear expenses of the fund of fund and also the underlying fund. So the common perception is that these are more expensive funds, but the fact remains here that SEBI has capped expenses at 2.5, and in fact there are a number of funds that are charging much less than this cap. Third, I think the major drawback for fund of fund is that their tax treatment. Now, even if a fund has more than 65% exposure to equity, which is the basis of considering a fund like an equity fund for tax purposes, this fund of fund is still considered as a debt fund, which means that the fund has to pay dividend distribution tax. Investors have to pay long-term capital gain at 10%, and then short-term capital gain has to be nominal tax rate.
Even running out of time, so just quickly, what has been the annual returns or 3-year returns of these funds vis-a-vis, say, the best-in-class equity and best-in-class debt? And therefore, are you telling our investors to invest or not invest in fund of funds?
No. The only major problem, like I was saying, Lata, is that the tax treatment. I think the time has come to realize that they have to be treated on par with the other balanced fund. If that happens, I see a major change, and I see a lot of investors then preferring to invest in that because, as I mentioned earlier, they are a very, very simple way to invest in different funds through a single investment.
All right, we'll take a break. We'll come back with an investor and find out what their query is. For now, Hemant, just stay on. We'll need to take a break and come back. Yeah, we have an SMS actually. So we were talking about the pros and cons of investing in fund of funds, and Hemant Rustagi is still with us. Hemant, Muhammad Akram has written to us from Gujarat, and he says that he earns around 7,000 rupees per month, and he wants to know how he should allocate his funds and how much should he put in a particular mutual fund. Also, if there is any good fund of funds advice that you would give him in terms of where to allocate his money. We don't know his goals, but we just know that this is the amount that he wants to put per month. What would your recommendation be?
Well, I think it's good to see someone who's maybe at the beginning of his career and looking at starting the process of investment, and that too, considering mutual funds to invest in. But I think there are a few things that he needs to really focus on before he starts investing in it. One, he needs to do a proper budgeting, and that will decide as to how much money he can invest every month, because he definitely needs to avoid a situation where he starts investing any amount and then stop the process midway through. Second, I think he needs to be very, very clear in terms of his time horizon, because that decides as to how much money has to go into equity and go or debt. So I think these 2 points really he needs to focus. My advice to him would be that if his time horizon is 1 year or thereabout, considering that his total income will not attract any income tax, he should be looking at bank deposit or recurring deposit rather than looking at mutual funds. But if he can invest for a longer period, maybe 5 years or more, then depending on the kind of risk he wants to take, he can either consider debt-oriented hybrid funds like monthly income plans. There he can look at 1 or 2 funds I can recommend to him, HDFC MIP long-term or Reliance MIP, or he can look at equity-oriented balance fund where he can look at HDFC Prudence. So I think, like I said, 2-3 factors that he need to look at and then decide where he should be investing his money.
Fair enough. I hope he's listening. Thanks a lot, Hemant, for joining us with your thoughts. That's the personal finance special today. We'll take a break and we're back with Markets in a minute.